Imagine for a second that Marcus Aurelius, the wise Roman emperor, was alive right now, navigating today's complicated financial markets. How would one of history's greatest Stoics invest his money today? In the next few minutes, I'm going to share practical financial rules inspired directly by Marcus Aurelius, timeless strategies that would surely shape his investing decisions in our modern economy. We often think investing is purely about numbers, charts, and analytics, right? But here's a twist. True financial success might be less about numbers and more about mindset and principles. Marcus Aurelius was renowned for his disciplined mind, emotional control, and clear, purposeful thinking. And these Stoic qualities translate directly into powerful investment strategies that billionaires still use today. First up, Marcus Aurelius would undoubtedly emphasize the power of simplicity. The emperor himself lived a life rooted in clarity and straightforwardness, avoiding unnecessary complexity. But how exactly would simplicity look in modern investing? Well, Marcus would likely stick to a straightforward approach, a balanced, diversified portfolio of quality investments. Instead of chasing hot trends or complicated financial instruments, he'd prioritize stable, proven assets like blue-chip stocks, reliable real estate, and even gold. It's not flashy, but remember, simplicity brings stability. But here's the real kicker. Why would Marcus Aurelius caution against complexity? Because complexity often breeds emotional decisions, and emotions are the enemy of good investing. And that brings us to our second Stoic rule, emotional discipline. Marcus Aurelius famously wrote that our emotions are nothing but judgments we choose to accept. Imagine him watching the stock market plunge. While most people panic sell, Marcus would calmly reflect, understanding that markets move in cycles. This Stoic emotional discipline allows investors to resist impulsive reactions and stick to their long-term strategies. But hold on, there's something even more insightful here. If Marcus Aurelius was an investor today, how would he handle unexpected market downturns or personal financial setbacks? Here's where his timeless Stoic principle of accepting what we cannot control comes into play. Markets fluctuate unpredictably, and Marcus would understand that he can't control the economy, interest rates, or global crises. What he can control, however, is how he responds. Marcus would advise us to invest regularly, what financial experts today call dollar cost averaging. This means consistently investing the same amount of money regardless of market conditions. Over time, this disciplined approach lowers your average purchase price, effectively reducing your risk. It's a straightforward strategy grounded in Stoic thinking. Control your actions, not the outcomes. Now here's a thought-provoking question. What would Marcus Aurelius think of trendy speculative investments, cryptocurrencies, NFTs, or meme stocks? Surprisingly, he wouldn't dismiss them outright, but his Stoic wisdom would lead him to a critical rule: investing with clear purpose and deliberate intention. Marcus believed that every action should be guided by reason. In other words, he'd ask himself, why am I investing in this asset? What's my clear, rational reason? If he couldn't find one beyond following the herd, he'd step away, no matter how tempting the hype. Another fascinating investment rule Marcus would apply is moderation. While today's investment culture glorifies going big or going home, Marcus Aurelius believed deeply in balance and moderation. He wouldn't put all his money into one single investment, no matter how promising. Instead, he'd spread his risk wisely, ensuring that no single downturn could wipe out his wealth. This Stoic wisdom echoes through today's most successful investment strategies. But we're not done yet. There's one more powerful financial rule Marcus Aurelius would insist upon, and it's the most transformative of all. In a world obsessed with quick riches, Marcus would champion patience as his supreme investing virtue. He wrote in his Meditations, "The nearer a man comes to a calm mind, the closer he is to strength." What does this mean for your investments? Simply this: patient investors, those who remain calm and resist the urge to constantly buy and sell, almost always outperform impulsive traders. Marcus would teach us to think in decades, not days. I'm Saul, and here's an intriguing question for you. If Marcus Aurelius had a financial advisor today, who would he trust to guide him through modern investments? Would he rely on the latest robo-advisor technology, or perhaps a seasoned mentor? The answer to that question may surprise you, but to fully understand Marcus Aurelius's secret financial ally, you'll have to keep watching, because this unexpected choice reveals an investment truth so powerful it could completely reshape your financial future. Let's dive into this secret together. Marcus Aurelius once said, "The soul becomes dyed with the color of its thoughts." So, who would Marcus choose as his financial guide today? An advanced robo-advisor or a wise mentor? Surprisingly, the answer is neither. Marcus would rely on the Stoic practice of self-reflection and continuous learning. He'd become his own advisor by constantly educating himself and critically evaluating his decisions. Imagine Marcus meticulously reviewing his investment journal daily, tracking decisions, reflecting on market movements, and noting down emotional reactions. This simple habit would help him become exceptionally self-aware, allowing him to identify patterns, control impulses, and improve over time. This Stoic discipline of reflective journaling isn't just philosophical, it's practically useful, transforming investors into disciplined, rational decision-makers who consistently outperform the market. But here's the twist you've been waiting for. Marcus Aurelius would also leverage modern technology, not out of blind trust, but because Stoicism encourages embracing useful tools rationally. Marcus would likely incorporate advanced AI-driven analytics into his investment strategy. Instead of blindly following technology, he'd use AI insights to enhance his thoughtful, disciplined approach, combining timeless Stoic wisdom with cutting-edge innovation. And here lies another secret Marcus would reveal. The key to successful investing today isn't choosing between ancient wisdom and modern tools, it's blending the two. He'd understand that Stoicism provides the mindset, discipline, and emotional framework necessary for smart investing, while modern technology offers precise, data-driven insights. Together, they're unstoppable. Now let's shift gears to another crucial aspect: financial integrity. Marcus Aurelius famously believed in living with honor, transparency, and fairness. So, how would this philosophy influence his investing approach? He'd certainly avoid shady or unethical companies, no matter how profitable. Marcus understood that true wealth isn't merely measured in monetary terms, but in the quality of one's character. By investing ethically, he'd ensure not only financial success, but deep personal fulfillment. But Marcus wouldn't stop there. He'd also build a clear, long-term financial vision based on Stoic values, like freedom, tranquility, and purpose, rather than just chasing arbitrary monetary targets. He'd structure his investments around clear goals, perhaps financial independence, funding meaningful projects, or contributing to society. This Stoic approach ensures money becomes a means to an end, not the end itself. Let's consider this further. Marcus Aurelius advocated preparing for adversity during good times. Translating this into investing, he'd insist on establishing strong financial buffers, like emergency funds or diversified assets, to withstand economic shocks. While others panic during downturns, Marcus would remain calm, confident in his preparation, and even able to seize opportunities during financial storms. Finally, Marcus would teach one transformative lesson. Investing in knowledge yields the highest return. He'd consistently dedicate resources, time, money, and energy to educate himself continuously. From timeless financial classics to modern courses on economics and psychology, Marcus would prioritize personal growth above all else, recognizing this as his most potent investment. I'm Saul, and here's something important to reflect upon. Could applying Marcus Aurelius's Stoic investment principles genuinely transform your financial future? Could his ancient strategies outperform today's complex financial algorithms? These aren't merely philosophical questions. They could dramatically shift your entire approach to wealth. The answers might challenge everything you currently believe about investing. But embracing these Stoic principles could also open doors to true, lasting financial freedom. Let's explore this path together, step by powerful step.